Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, April 9th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. So far today, in overnight trading, prices popped up, pushed back toward the 8-period average, but still appears quite bearish at the moment until it can really establish or re-establish acceptance back above the previous month's close. Right now, what really appears to be developing is kind of a pullback ahead of the next drop. So you can see right here, that's the previous month's close, that white dotted line. Price went offered through it on Friday, coming back to make it resistance right now. A pullback this morning, if price fails above that previous month's close, could be a selling opportunity for another round of weakness to lows. Basically 25.29 is that next key level down, and that's just reaching the key level. That's not really surpassing and trying to push below it. So again, we still have the potential to drop as low as 2,500. This thing could drop down into that zone 2,500 and still be a trap opportunity for an eventual bounce back toward 2703. But right now we really haven't seen the great rejection. Instead, we've pulled back and gotten some selling pressure into the stacked PIMAs and now selling off. So I would say be wary of a little bit of early strength this morning. If price cannot reestablish back above, say, 26.40, 26.37, then we could be looking at much more weakness here ahead. So again, this is the key level to watch here. That's 26.40. Basically, if it can't clean back above that zone, we could be dropping much lower ahead. So keep an eye on this one. Again, we're still in the middle of the range, or toward the lower half of this range here, and basically, you know, it's out here where we have the best edge. So again, until we did something like that, this is the best opportunity right there. This, not so much. But again, failure to hold that 26.40 could get you a move to the edge, which could be quick to that lower target. So again, keep an eye on 26.40. We'll see if prices stay below that zone to begin the week. Looking at the NQ, very similar price action right now. Again, they're almost mirror images right now, where prices bounced here shy of the lower boundary of the edge. And then on this pullback here, we've seen some selling pressure. Here's the previous month's close showing resistance yet again. That's just shy of the 6,600. So again, early upside movement here this morning or in pre-market. But again, that early strength could be sold here as price perhaps heads as low as 6,200 over the next couple of days. So again, keep an eye on that zone. If we cannot reestablish back above 6,600, especially that 6,653, this has been the big pivot the entire time. I mentioned until we get above that level right here, we're going to continue to show weakness, or at least sideways to down. This is the level that would bring us back across this range, and so far been offered on multiple rotations. So again, until proven otherwise, we still have a downward bias until we can clean back above that zone. Alright, let's take a look now at crude oil. Crude oil's been in a trading range. Nice trending behavior here. If you look at the range right now, we've rejected the upper end of the range, dropped back toward the 62.18s, tried to bounce here. I mentioned before that this looked like it was developing into a great buy opportunity. I mentioned to watch the midpoint at 62.80 to 62.85. I mentioned that's the last line of defense for bulls looking to return prices back toward highs. If you can't hold that 62.80, all bets are off. The trade is off, and that's what I like about these levels, is that they're so clean at times, and that's when price pushes through. Because when price began to push through that midpoint, the stop run was on. 9 times out of 10, you're going to take out the low. So again, that's why we look at such precise levels here, because below those zones indicates that the other side is taking control. So right now we're right back at 62.18. That continues to be the midpoint between these two extremes, 58.07 and 66.29, and we're right at the middle of that zone. So again, there's no real edge in this area. We got to continue to be patient. Given the current down move, failing to hold 62.18 could again lead to a retest of 60 to 60.12. That was the idea before, that if we couldn't hold this zone, perhaps we are headed to 60 to 60.12. So again, that's the idea right now. 63 is going to be the big level short term today. Failing to get back above 63 will suggest more downside over the next couple of days. Alright, let's take a look now at gold. Here's a look at gold futures right now. Basically, gold has traded in a clear range. It looks just like crude in that it's basically right at the center of its key range. So we have this trading range that is developed basically from 1305 to 1365. We're sitting right here at 1335, 1330, and again, there's no edge right there. At some point, yes, we'll get a move either here or here to the edge, but we could chop in this middle part for much longer and provide some headaches and whipsaws before we make that decisive move. As I always say, the best moves are usually fading the edge when we get there, not the move to the edge. It's fading the edge back out. Like this one here was a quick 2-day move. This one here, again, another couple of days. Those are the fast moves. Over here, once we get into the middle area, lots of chop, lots of pain in that zone. So I would be cautious in here. Again, not really a whole lot to do in gold until we start to see expansion. We could be closer to that expansion point than we were before, now that we've developed basically an entire quarter sideways. So at some point here, we may start to see a 2 to 3 month expansive move. Alright, let's take a look lastly at Bitcoin. Here's Bitcoin. Bitcoin's been trending lower. Again, nothing to really suggest that the trend is going to change in Bitcoin. This thing looks really weak. We've been trending down. You can see every time we come into this zone here, which is the high intensity trigger zone, the market's been dropping. Here it is again coming into that zone. Failed new high perhaps could be in play here. There's 2-day highs, and right now price pushed above them and couldn't really establish acceptance, now back below. That failed new high right there again is suggestive of more downside weakness, and until we flush out stops below 6,700, below 58.80 even, you know, this thing is going to continue just quietly trending lower. So it's going to take a major event below 6K in order for this thing to reject, but when that happens, it could be quite an opportunity to return it back to 9K and 12K. Alright, that's it for now. Let's see how this plays out heading into the rest of the week of trading. Good luck, trade well, and I'll see you soon. Take care.